Let's talk about mortgage rates a little bit. As of right now, rates are in the low to mid fours. They're expected to push into the fives maybe this year. There was a lot of furor last year when rates started to creep close to 5%. But if you look historically, rates are still incredibly low. I mean, even back in 2006, rates were close to 7%. In the early 90s, they were above 8%. If you go all the way back to 1980, rates were close to 20%.
It's all perspective. When I bought my first place in Chicago in, I think it was 1994, I had a 5-year ARM at 9.25%, and I didn't even think about it. It was just, that was where the rate was. People will definitely have to get used to not having 3.5% interest rates, but the reality is 4.5%, 5.5% are still incredibly low rates, still very, very compelling for buyers. I don't see anything on the interest rate horizon that will have any kind of long-term effects on, I think, our buyers. I think short-term, there'll be short-term bumps when the interest rates go up, but long-term, I can't imagine that until we start seeing sevens that we really have an issue.
As far as rates too, the interesting thing is that when the Fed raised rates and called that they were going to raise them 2 more times this year, you saw a drastic pullback in mortgage. So mortgages came down about 0.5 point. And now what's interesting is that they're anticipating potentially that there will not be another rate increase. Wall Street has not priced in another rate increase, which would mean that our rates are only going to stay lower for a longer period of time. So for our growth, slow and steady, right now mortgage rates are helping us astronomically.
I also think buyers too have a little perspective. After seeing rates creep close to 5 last year, now that they're back down, they're realizing that if you're going to buy, this is the time to do it. Lock your rate in now. So that's perfect timing for the spring market.